Hey, it's Clay Trader, and this will be a video chart on ticker symbol MACK. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think it does a good job of telling the quote-unquote story of the price, and then just makes mapping out levels of support and resistance a bit easier to see. Not to state the obvious or rub salt in one's wounds, but pretty brutal day. The gap down and then the opening 30 minutes, again, each of these is 30 minutes, was just all bears. And then to give some credit where credit's due, the bulls did step up. Now, I fully realize that if you bought before today, then there's nothing I can say that's going to make you think bullish or anything like that. So any use of the terminology bullish or strong or anything like that, keep in mind I'm just talking about after today, opened up, nothing before today. So like I said, price came down and then the bulls showed some signs of strength. What do I mean by that? Well, if you've been trading long enough, I'm sure you've seen stocks that gap down, and then after that gap down, they pull back or they fall more and then bleed and bleed and bleed and bleed the entirety of the day. But that didn't happen here. The bulls did show up, and they showed up in the sign or in the sense of just going sideways. Now, don't get me wrong. I wish the market was this easy. Just because the price started to go sideways after getting beat up, a whole lot, does not guarantee that the price is going to bounce. Would I be shocked to see some sort of bounce? No, that would not be shocking. However, that doesn't mean that this is guaranteed to bounce either. No such thing as a guarantee in the market. But what the chart or the quote-unquote story has told us is there are some buyers hanging out down around $4.35. You can see multiple times the bears try to press down through there, including there in that final 30 minutes. But whenever the price got right around $4.35, the selling pressure just was not enough to push the price down through. So does that mean that there's going to continue to be buyers there at $4.35? There's no way to know that. Charts aren't a crystal ball in that sense. All they're telling us right now is, according to the story, people are finding a good deal at $4.35 and are willing to kind of, quote unquote, put their money where their mouth is and buy some shares. So we'll see if those people are smart, or, if the price obviously comes down here tomorrow and crashes down through it. Well, that wasn't really the bottom. But as it stands now, there are people that are thinking that right around $4.35 is the bottom. In the event this is some sort of bottom and level of support and the price starts to bounce, let's map out a couple of areas of resistance. And the more I look at it here, really the key level of resistance at this point is just right up here at $4.50. You can see a couple different instances both there and here. Bulls try to get up above it and just couldn't quite do it. So, if the bounce is going to get any sort of momentum behind it and get any sort of kind of momentum in the sense of, bringing more and more traders to get interested, 450 is definitely that first hurdle that they're going to have to cross. So interesting setup. We'll see how this unfolds the remainder of the week. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.